Let's talk about some of those tricky or weird things to categorize as a bookkeeper. Number one is payroll liabilities. So as a bookkeeper, I always use a payroll company to do payroll because there's a lot of moving parts. But even with that, you have to make sure that when the information is going from your payroll company into QuickBooks Online, that everything is categorized correctly. There's usually about 3 different buckets that it can go into. And one of the weirdest ones is the taxes that are withheld for the employee. So employees are responsible for paying certain taxes for themselves, right? So you as a business owner or your client that you're doing payroll for basically like sets aside some money out of the employee's paycheck to pay the IRS. And so that is not an expense to your business as the business owner. That's kind of like between the employee and the IRS. Like it's kind of their deal, but you're like the middleman. So a liability account in QuickBooks is kind of like money that you owe. And this whole topic could be another video, so let me know in the comments if you're interested in that. This honestly isn't my strongest suit, so also let me know if I'm saying anything incorrectly. But my point for putting this on the list, and actually all of these things, is that remember, some of these things aren't as straightforward as you might initially think, so do some really good research as a bookkeeper if you come across these things with clients. Every time I set up a new client in payroll, I have to either look up exactly where everything is going or actually refer to a previous client and be like, okay, I put the liabilities here and the wages are an expense, so you always want to put the wages as an expense to the business. The payroll fee is an expense. That one's kind of obvious. Usually it's like $100 and some for actually using Gusto or using whatever payroll platform it is. But it is important that you put those certain taxes into a liability account, because if you put it as an expense, you're going to be misrepresenting the expenses for your client's business. And so it's actually kind of dishonest, because it's like, we didn't spend as much money this year, and so we're not paying taxes on that. And hopefully your tax preparer will know that and kind of figure it out. But payroll liabilities is definitely one to watch out for. Number 2 is donations. And this one I actually just learned some new things about this year. And that does go to show I've been a bookkeeper for 10 years. You're not gonna come across every situation with every client. So you definitely wanna have the mindset of a continual learner. And as a bookkeeper, I'm not a certified tax preparer. I have another video on kind of like the differences if you're confused about that. So you can search tax preparer on my channel. So I am partnering really closely with that person to make sure I am categorizing the books exactly as they want it. So speaking about donations, there's a lot of different things that can be going on within donations. So first, let's talk about advertising. So I believe if your business is sponsoring an event, say it's like a golf tournament or a dinner or a school event or something, and that includes your name on signage or, name recognition for your business, I believe that is considered advertising, which is good because that's a fully deductible business expense. Then donations can be a little more tricky. First of all, you know that donations need to go to a 501c3. The charity has to have that specific designation for it to count as a donation. And I believe if you're giving just cash to the charity, that is a donation that is deductible. But if you're getting some kind of goods and services, you need to get a detailed receipt about what the money was going to. For example, this year, my husband and I went to a charity event. We bought something in a raffle, and then I was like, oh, I can deduct this money that we spent on the raffle. But my accountant explained that you have to take the value of the goods, and then if you paid more than that, then that difference is deductible, which actually does make sense if I think about it. That seems more fair, really. Otherwise, people would just be getting so many free donations, and I don't know, I feel like that would get out of control. Also, if you're getting food and drinks for your donation, that has to be taken into account also. Number 3 is meals and entertainment. This one is tricky because there are 2 different types of meal deductions. There's things that are deductible 100% and things that are only deductible 50% by the IRS. And I do have a whole video covering this topic, so you can search if you want more info on this. But as a bookkeeper, this does come up a lot actually. The things that are deductible only 50% are when you take a client to lunch, like maybe you go out to lunch with someone, that's 50%, along with networking events and travel meals. In QuickBooks, I put this in a different category and actually label it with the number 50%. So it's clear to everyone what it is. It's clear to me, it's clear to the business owner and to the tax preparer. And then the things that are deductible 100% are mainly parties for the entire office. And I also categorize office snacks as that. I've heard some debate about that. Let me know in the comments if you have an opinion about if there's soda in the fridge at the office. That's kind of like an office supply. And hopefully as a bookkeeper, you've learned that if someone is just going to lunch on their own, walking, if the business owner walks from their office to go grab lunch, that's not deductible if they're just alone by themselves. And so you'll probably want to come up with a system to communicate with your client about these different types of expenses and how you as the bookkeeper are going to know when it is what. If they went to a business lunch with a client, for example, I like my clients to write on the receipt who they went with. And then I usually have a system where I can get familiar with kind of like the normal places they might go to lunch with clients, and I can also Google like new restaurants, and then mostly I assume things are the 50% deduction. And then in the more special cases when they're the 100% deduction, then a lot of times I will have the foreknowledge like, oh, I know they're having their Christmas party, or I know they're having their annual event that they feed people at. And then in that case, I can categorize it correctly in the 100% bucket. All right, next one is travel expenses. Again, I have a whole dedicated video on this if you want to check that out. But basically, when you're traveling for business, flights, hotels, car rentals are deductible. Meals are deductible 50%. I kind of think of it because like you're gonna be eating anyway, like if you were home, you're gonna be eating, so it's not like fair necessarily to just deduct 100% of the meals. If they are going for like a conference or something, then there is a category that is for continuing education or training and education, something like that. There's also a way to do per diem meals, and usually my clients haven't done that. I think I had one client that did that. And if I remember correctly, that's just like they get a certain amount of money for meals each day. And I think you can just Google, like there's a standard meal amount that probably changes a little bit each year. My name is Morgan. My website is finepoints.biz. In addition to subscribing to this channel, you can also join it if you want. There's a small monthly fee and you get a bunch of perks. If you just click on the join button, it'll explain it to you. I also recently started TikTok, having some fun over there. If you are on that platform, here is where to find me. Next one is office supplies versus office equipment. And this was helpful because like 8 years ago or something, I had an accountant that was really like strict about this. It was a good learning experience for me because I was like, oh, I didn't really realize that these two categories were so different. So office supplies are lower dollar amount things like pens, paper, printer ink, all that kind of stuff. And then office equipment is typically more expensive things. I'm not sure if there's like a standard amount. It might depend on your client's finances. I think we were going with anything over $1,000 to put in office equipment. Another thing I read said anything over $2,500 is equipment. That's things like computers, laptops, like large printers, monitors. I don't know how expensive those are. But the reason you're separating those out is because a lot of times the accountant will want to depreciate it. And that is something I was taught how to do once, like in a class, but I don't depreciate things. I'm sure it's not that hard. I could probably learn it if I wanted to, but usually I'm just categorizing things into the office equipment section, and then the accountant figures out exactly how the depreciation schedule works. And if you don't know depreciation, it's just things over time lose value, I believe. If you're keeping track of the assets, all the assets for a particular business, like maybe they have like $10,000 in stuff in their office space, you kind of want to keep track of like, is this stuff worth $10,000 every year, or is it going down? Are they buying new stuff? It's one piece of showing like value for the business. Next one is client gifts. At the beginning of my bookkeeping career, I kind of thought that gifts for employees were just deductible, like 100%. But in reality, only $25 are deductible, which is actually kind of a small amount. So as an employee, like back right when I got out of college, I worked as an employee for 5 years. I feel like they give us gifts every so often that I think throughout the year probably were more than $25. I think in those cases, the corporation was just not getting like a tax deduction, or they were only getting a tax deduction for the first $25. So the more you know, right? And kind of my point in saying this is, as a bookkeeper, you're not going to understand every single part of the tax code your first year, most likely. It'll take you time and experience to figure this stuff out. And if everything is set up properly, hopefully your client, the business owner, is going through some kind of certified tax preparer, and that tax preparer did study the tax code and they should know every single thing. So my point is, no one is gonna die if you put one thing in the wrong bucket as a bookkeeper. Yes, you want to be as ethical and as accurate as is humanly possible, but there might be small mistakes that are made. I would not lose sleep over that. And don't forget, you can always ask questions as needed. You can use that Ask My Accountant bucket in QuickBooks. So just put things in there if you're like, I don't know where this should go. Or you can ask the business owner, you know, what all was a travel expense? Which of these meals was for a whole office party versus you're traveling? You know, just like communicate and ask questions as much as possible, and you're gonna learn more and more every year. The next weird one to watch out for is unusual transfers. This can actually make a really big impact on the business. Say there's a transfer for $7,000 and it goes from the client's checking account to their savings account, both within the business. So that $7,000 should be categorized as a transfer. In theory, you'd have both of those business accounts set up in QuickBooks as bank accounts, and then there would just be a transfer from one to another. And that doesn't affect the income or expenses really, right? Because no new money has gone into the business, it's just a transfer. But if the owner does a $7,000 transfer to an outside their personal bank account that is outside of the business, that is an owner's draw because they are drawing money out of the business. And I feel like I've said a million times on this channel, owner's draws are equity. Equity is like money that the owner is taking in or out of the business, and that does not show up on the profit and loss. It shows up on the balance sheet. Let's say you go into the bank feeds and there's a bunch of transfers in there. You have to make sure, look at the last 4 digits of the bank account, usually it's listed in QuickBooks, and make sure you know which ones are personal accounts and which one are business accounts. I just started doing something in my own business that I thought was really clever. I don't know if other people do this or have thought of it, but I just thought of it. You can steal my idea if you want. But whenever I transfer something from my business account into my personal bank account, I put the last digit as a 7. So if I'm transferring $1,000, instead of transferring $1,000, I do $1,000.07. For some reason, that is more clear to me than like checking every single bank account. I think I don't have my bank, the last 4 memorized always, or I have different accounts going on. Just switching it to that 7 cents at the end, that is like really clear to me that I'm like, okay, that's going to Morgan's personal bank account. Let me know in the comments what you think about that. The only problem is one time recently I forgot to do it. I forgot to add the 7 cents. And so I mentally I'm like, okay, I have to remember that one was a personal like transfer. I guess human error can mess it up a little bit, but you can steal that idea if you want. The other things I wanted to mention under this category of unusual transfers is 2 other things. One is startup costs, because those can be treated a little bit differently. Sometimes that is equity that the owner is putting into the business, or sometimes there's different rules about how to deduct startup costs. Look into that if your business owner if they're in a new business and they have startup costs. Another one to be aware of is loans. That might not actually be in this category, but loans, just make sure that you know how to do loans if your client has taken out a loan. I believe that a loan would be in the liability area again. And then every time you make a loan payment, if you're doing it correctly, you should put the total amount of the loan in QuickBooks. And then every time you make a payment, like the loan will go down. And then also I think that interest is an expense to the business. So that would be, you do a split, and then you'd put, you know, X amount is for the principal of the loan and X amount in interest. That's honestly not something that I have come across that much in my life as a bookkeeper. Thank you guys that have stuck with me all the way till the end of this video. Drop the secret emoji in there. Let's do like this guy that's like weird. Like he's like, what's the weird expenses? Put that one in the comments if you made it all the way to this point. And I will talk to you again next week with another bookkeeper video.